or less this week. Didn't feel exactly like a short week. It was Columbus Day, Indigenous Peoples Day on Monday, and although it was quite the Monday following the drama over in the Levant, as our friend Fellis would say. All of that said, we're going to go ahead and take a look at the charts, take a look at a few things today. We got some data coming out in about an hour and a half. So, maybe a couple of quick scalps could be possible in that time, but chances are the real action won't come until that data comes out. It'll be the consumer sentiment, I believe. It's the University of Michigan consumer sentiment. So when that kind of data comes out, it'll throw the charts into a tizzy, often a temporary tizzy. Sometimes it doesn't. Sometimes the charts just kind of go about their merry way, but we don't know what's going to happen until that information comes out. Let me throw on a little bit of our what do you call it? Non-copyright music here. Taking its sweet time to come on. There we are. A little bit of tunes. And I suppose the thing to do is get started. All right. Let's go ahead and crack open the screen share. Those of you who were watching earlier this week, I know the Gorilla had asked me, it might have been late last week, for a look at gold. So we'll take a look at that pretty much to go, I called it, because I did. But here you go. This is your sentiment coming out here at 10 a.m. EST, which is in an hour and a half, right? That's consumer sentiment. Let's go over to the charts real quick, and we will go ahead and zoom in a bit so everybody can see the numbers. And then we will go over to gold. And basically what had happened was, like I say, the Gorilla, who will be here pretty soon. He had some calls he's on internationally to deal with. But gold made a move up. I'm at, this is on like the weekly chart, so I'm going to roll down to, say, maybe the 5-day. I'm sorry, the daily here. And scroll out to current times. And I had made a prediction. We'll see if we can find it on the other chart. So, usually what happens is when you have international, potential World War III happening, things like that, you'll notice that gold will make a move up because the whole world, there's always a possibility when things happen in Israel that World War III has begun, although many think that it began perhaps in Ukraine. Either way, the markets have seen gold as a safe haven for such times, and gold makes a hard move up. And so it had started to move up last week, and I had predicted that it would kind of slowly make a move up until it didn't. And I thought perhaps it would make a move up and come back down once it encountered this resistance right here. Right, so that still was a valid mark on the chart due to a couple of pivot points. And it did make the move. It did start to retrace, but that was quickly erased. So you see this wick right here on this candle below that arrow. It made it up to this area and headed down here too. So this is just another pivot point to watch. I think we started talking, we started asking questions about what was going to happen with gold around here. And I said it would just kind of make its way up until this area and then possibly reject, possibly not. And it certainly started to reject. It did. You'll see that candle pushed down and even had a lower low, lower close. But something happened in the markets in the last day or so, because that is a massive move up in gold. That candle that we're looking at right now, it still has a couple hours left. This thing is it's mobbing up as we speak. So could it be possibly that the Dixie is getting weak? Let's see. The DXY is a chart of the dollar as compared to other currencies, right? So one way to look at that would be maybe like on a 3-hour chart. No, the Dixie is not getting weak. So the dollar not getting weak compared to other currencies. Let's erase all this test trash here. I was just testing algos a few months ago with this. Delete. Dude does not let me delete. There we go. Okay. What is this? This looks pretty good. Okay, TD heat map. That's a good algo. That's one of my friends wrote that actually. So no, dollar's not showing any weakness in the last 24 hours at all compared to other currencies. So gold itself is just making a strong move up. And let me see. This is on the daily, so I don't expect that to stop anytime soon. I mean, you might get some brief pullbacks, but right now gold's just looking strong. Yeah. Well, it is coming out of, for those of you who know which indicators I use, there's a particular dip in here that's coming out of. So there's this move up. Let's look at a higher time frame and see what's going on real quick. I'm going to panel out. Just 1 second. We're going to look, instead of the daily, we'll look on the monthly, because that was the weekly. So that was the weekly. We'll look at the monthly. Yeah, I mean, this move's got some gas left in it, but it's not going to last forever unless fundamentally it lasts forever, right? Unless something happens like, even more hostilities erupt in the Middle East. But I would expect this move otherwise to not make it past 1950. But yeah, I mean, you got hostilities erupting in one of the most, sensitive parts of the world. So, and I say it's sensitive, I mean like politically sensitive. I would look to see what happens at any of these kind of higher points. And if gold goes above 2150, then that's going to be, that's pretty much where, 2100, 2150, these are some of your older highs here. But any of these peaks where gold went up and then pivoted back down, if gold breaks those, that's going to be notable, right? Because above those areas, people were not trading a lot. And where people were not trading a lot in the past is where gold tends to not go. Gold will go, or anything tends to go where people traded a lot. And decision points like these are where people traded a lot. So gold could be attracted to this area and then reject back down. If it breaks through that, then obviously we're seeing some bullishness in gold. And given that we're looking at the charts and seeing what we're seeing, it could go past there. But again, the overall kind of, I'd say, the midterm nature of gold is probably that it's going to reject at one of these points. So ideally hostilities in the Middle East kind of calm down. I know there's a lot of saber rattling. There's just all kinds of talk right now about other countries being involved. And, we don't want to get in this particular channel, at least on the free, at least on the free one, this, beginners live lab that's meant for new traders. We don't want to get too far into the political nature of what's going on, but I can tell you that as hostilities become more risky, as larger countries are becoming possibly dragged into this conflict, gold may continue to come up like it does, like this. And there were some attacks. I think Israel hit like a Damascus airport, which is a big deal because, Israel's like branching out to Syria, which, Hamas is the one who attacked Israel. Hamas is not part of Syria. So Israel is in effect pretty much saying, hey, we're just going to hit anyone that we think might be involved. I don't know. Maybe they have intel. I have no idea. I don't dig too far into that, but I know they hit Damascus, which is a big damn deal. I know that the Israeli Air Force has been hitting Syria here and there. It's not a new thing. terribly, but there's there's calls implicating Iran, and so ideally, I can tell you if things escalate, gold will escalate. Just make it that simple. If things calm down, then gold's probably going to reverse at one of these areas, which would be either 1950, 1990, or maybe in the mid to high 2000s. And I think 2150, if I were to zoom out and look at a higher time frame, look here on, say, the monthly chart, we would see that gold's, at least on this chart, gold's top is sitting at about 2070. So if we break above that, I mean, this is all-time highs, and this kind of escalation, it might be able to cause that. I can tell you if other countries get dragged in, like Iran, which is a huge country with a huge military, and has loyalties that are very powerful loyalties with powerful countries such as Russia. Okay, now you're talking about who knows what happens with gold at that point, but we're not going to cross that bridge until we come to it. I'd say jump off that bridge, really. Got Jay Martin from Everett, Washington. Yeah, Everett. I know Everett. Excuse me. Man, sorry about the yawning. I have a new kid, so I'm going to use that as my excuse to be a little bit tired, even though my wife is taking the brunt of that. My mother-in-law worked in Everett and lived up there for 5 years for Boeing. So I know of Everett. Certainly my wife knows it. But at any rate, that's gold. That's really the, gold's bullishness right now. It's understandable from a charting aspect, and adding fuel to that fire is going to be the political aspect. If you see gold breaking above 2070, though, I mean, that's very, very dangerous. Oh yeah, Spokane, Jay. All right, cool. You're not terribly far from where I am. I'm not terribly far from Spokane. I could drive there in a day. Of course, a lot of people can drive there in a day. That can mean a lot of different areas, but I think you know where I'm at, Jay. So no need to elaborate. But yeah, so I figured I'd take a look at gold because that's what you look at when conflicts break out, right? Yeah, let's have a drink of coffee here, and y'all can listen to this wonderful free hip hop music. I was going to stay up and trade overnight, and I'm glad I didn't, because there was a nasty, nasty stop run. We'll look at that on the charts right now. So basically, a stop run, maybe that's what we'll talk about today, are stop runs. I know we've talked about them before, but I always like to review some kind of beginner concepts on this beginner live lab. It's kind of what it's for. Let's go over to EURUSD, and this happened across the board last night. There was some data that came out, and this is why I didn't trade overnight. That, and I just didn't feel like doing that to myself last night. At 2 a.m., Governor Bailey speaks, right? So basically, that's the Bank of England, which is I think people underestimate what kind of effect that the Bank of England has on everything. Yeah, Jay, I mean, I'm not in Coeur d'Alene. I'm not even that near Coeur d'Alene, but that's, if you're in Spokane, you're pretty close to at least my state. I'm on a very different part of the state, but anyway. So whenever Bailey speaks, you're going to have a lot of movement in the markets, right? And so I didn't trade last night because I'm like, okay, at 2 a.m., the Bank of England's, governor is going to speak. And England still has a hand, of course, in affairs around the world. We talk about some things on the Rogue channel that should clue you into all of that. Real going to take a quick break from this conversation. Brad King's asking about having issues with the WAND on TradingView. Can't close position I'm in, says contact broker. Yeah, so here's the thing. I have had that happen, Brad. It's a very uncommon thing to happen. I did start a ticket on TradingView, and it took a few hours to clear. All you got to do is just open up your broker. Just open up Oanda. They're trade.oanda.com if that's your broker, and just close the trade in there. And I always have Oanda open on my browser just in case something like that happens. So sorry to take a quick break on there, but what Brad is talking about is important. So we'll come back to stop runs just so you understand. If you're using TradingView, okay, TradingView has what's called an API with a lot of brokers. So if you look here, there's your trading panel down here on the bottom, and you have TradeStation, paper trading, all these different, OKX, Oanda, interactive brokers, FXCM, different, around the world. I can, you can click all the brokers. I mean, there's a bunch of them. Binance. You see that Jay's having an issue with Binance right now. So it appears, now I did just close a trade through TradingView not 20 minutes ago, so I'm not having that issue right now. But at any rate, if you are operating the API, if you're using the interface between TradingView and your broker, it may be that there is an issue closing trades right now. And if that is the case, then simply go to your broker screen and close the trade through that. It's very, it's not a common issue. I've been doing this for years and not had it, but I mean, not had it more than like once. And it was recent. I think it was like a month and a half ago that happened. So these things do happen. Okay, so a stop run, and as is functional in this conversation, when we're trading, what we do to limit our losses is we have a stop loss, and even beginner traders tend to understand what a stop loss is. So I won't spend a lot of time on that in particular, but I will, at least define it for the purposes of this conversation. We need to go to a lower time frame for this. Okay. So we're going to talk about stop losses so we can talk about stop runs. All right. So a stop loss is when you get into a trade and you have a place on the chart where if price goes against you and it goes past this area, then you're going to be out of the trade. Okay, you're automatically taken out of that trade. You cut your losses and run. Okay, so let's say that you get a signal right here and you want to go short maybe at the next candle. And you set your stop loss. We're going short in this scenario. Okay, so that means that for people who are super new to trading, we're betting on price going down. So this green area in this square is profit. Okay. And the blue is where we're experiencing loss. And if price goes above here, above this blue area, that means we are out of this trade. If price goes down and cuts at the end of this box, that means we are taking profit in this trade. It means we have won the trade. Okay. So in this case, price, and I've gone back in time here. So we're going to pretend that this is several hours ago, and we got into the trade and we're in profit. We're doing great. And price has, going towards our target. All right. So we're doing great. You see how that's green right there? The green means we're winning. Okay. Most people are using red on this top part here and not blue because red means loss. But psychologically, I think that's maybe, it's just something I do. I don't put red. Red can mess with your head. So, that rhymes. All right, so in this case, though, a lot of people have their stop losses above this pivot point. Okay, that's how people generally trade, and that's another conversation. We don't have to get into that, but most people will have their stop losses above a pivot point because that creates something called structure. Okay, so in this case, if price had gone up, it would have taken us out of the trade. We would have had a small loss and moved on. In this case, if price goes all the way down here, we have a big win, right? So essentially our winning amount here is 3 times our loss amount. So we could lose 100 or win 300 or lose 1,000 and win 3,000. This is how we stay profitable. We make our trades be asymmetrical as much as possible. Maybe it's only 2 times as much money as you would win or lose, right? So anyway, back to the stop loss conversation and the stop running conversation. So we have stops up here where I just drew that line, right? If price goes against us, we cut our losses and run. And all of our metrics said, okay, this is going to go down right here. So we entered this trade. And as time goes on, it looks like we're going to win. And then price goes against us. Well, naturally, In this case, it was before Governor Bailey spoke, which is actually interesting. I could talk about that, but I won't. And then price went against us and cut us off right here. All right. And then right here, this is at 2 o'clock, Governor Bailey speaks, and then the market turns around and then goes in our direction. So this is a very typical stop run. Okay. So basically we thought price would go down, and in the end we were correct, but the market came back up and everybody went short right here. Not everybody, but a lot of people went short, and a lot of people's stop losses were right up here. And so the market makers see that, and they know that perhaps they can take advantage of Governor Bailey speaking. So they push price up to here and then take your money and then run. And then they go in the direction that market was going to go anyway. And that's what's called the stop run, because this is a profitable thing for these traders. What they do is they take price up through stop losses, and then that creates an upward pressure, because a stop loss in this case is just a buy order. Okay, so buy orders are going to force price upwards, and they don't even have to pay. They got to pay a lot of times to get price to head up a little bit. But once it starts hitting people's stop losses, those stop losses do that job for them, because they're merely buy orders. And that pushes price higher and higher. And then what they do is they start getting short right up here. And then price goes in the natural way that it was going to go. And that's a stop run. It is a very common thing. And it's just part of trading. And this is why when I'm doing, when I'm trying to determine my profit and loss scenario, when I'm trying to look at my risk to reward ratio, I have something ideally around 3 to 1 or better, because 3 to 1 means that, okay, so I lost $100. I can re-enter this trade and still make $300 and only have lost 100. And then if I lose this trade, I've only lost 200, and my next trade is still going to make me 300. So I could lose trade, I can lose a few trades, more than half my trades, and still be profitable. Okay. But yeah, stop runs happen. It's part of life. And a lot of times, if your metrics line up, if you have good algo, if your trade method, which is otherwise known as an algorithm, tells you that you can enter this trade again, that's one thing that you can do. We just have to be careful to always follow your trading rules, because one thing to which a lot of people fall prey is called revenge trading, where they lose a trade and they're like, I'm going to get that money back. And then they kind of trade with a little bit of emotion. And that's unwise. We always let our charts and our algos tell us, what we're going to do next. We don't let our emotions run us as traders, because that is a quick path to loss, right? Okay, so that's that. Let me see. Back to the conversation about the API. It looks like the trade filled on Oanda's website, so that's good. That means that the actual API worked, but it didn't reflect on TradingView. So closed, reopened. That's one thing I'll do. I mean, look, that anytime you have a problem with tech, I just shut it off and turn it back on. Half the time that works. But always have your broker open as you're trading, because if there's an issue with the API, you can just go into the broker and do what you got to do. That's a very important thing. And that's, when it comes to TradingView, you're not really able to, it's tough to auto trade. You can do it through webhooks. I mean, I'm doing it. I am actually connecting TradingView to one of my brokers. It's on a demo account right now, not real money. You have to know how to do that. And that's done through something called webhooks, which is independent of TradingView's API. So it's, by the time that you get to that point where you have built an algorithm and you're manually trading that algorithm, just like any trader out there has done forever, okay, so you've traded that for a while, it's profitable. You have the money to pay a coder to turn it into an auto trader. That tends to happen through what's called webhooks, and that's a separate website driven scenario. It's not through the API, through TradingView. So those kind of issues shouldn't be a problem, because you are sending your orders through a separate process. Okay, something to know about auto trading. You cannot just auto trade through TradingView. I think they haven't made that possible, in my opinion. Actually, it's my coder's opinion, due to liability issues. They've not made auto trading possible directly through TradingView. You have to do something called webhooks. So that is getting real advanced, and that is not a beginner concept for sure. So we are at the end of the beginner session, and I think that was relatively beginnery. I think that last part might have been advanced, but before we go, I'm going to throw up the QR code, and you can go ahead and head over to www.algofactory.tech, find out who we are, what we do. You can zap that QR code with your phone if you're watching this. Also, please do the thumbs up and, like, subscribe, all that YouTube stuff does help us out. And on top of that, we have a couple minutes left. If anybody has questions in the even in public chat or private chat, whether you're watching this live, the handful of people who are, or if you're in the private group, you have questions, now is your time. And we'll just kind of let the gentle music guide us for a minute as I take a drink of my next caffeinated beverage, which is tea. Yeah, my wife really is, she's taking the brunt of the new baby stuff, of course, because, I'm working and she's not, and that's fine. That's what we want. We want to have, that's our ideal situation. So looks like we have a message in the chat here. Let's see. Oh, super helpful. Okay, Brad, glad I could help. Yeah, not a problem, my friend. Brad is among a group of people in the private, in our private subscribers who are really stepping up and putting their algo together. And I love it. I mean, we got people in there reporting, hey, I've got through 100 back tests. Hey, I'm forward testing now. Like, we try to do for lower time frame stuff 200 back tests. And yeah, that's actually, Trev said it. And I unfortunately, because I have so many privacy lockdowns on my phone, I can't use the app for my broker. But if you're trading on TradingView's API and you want a quick way to close out your positions if you're away from your station, the phone app is super, super valuable for that. And I used to do it all the time. I used to always have the phone app running, but now I have way too many privacy aspects on my phone. I don't run anything crypto trading, nothing on my phone. Phones are just such an attack face. So fortunately, I run 2FA on everything now. So even if I did have that kind of a problem, should be okay. But at any rate, yeah, that's a good thing. So back to the conversation, though, as far as people in the group making progress, it's going on. I love to see it. A lot of guys and gals back testing right now, and I've got people who are beginners, brand new people who've never traded, and they're getting into it, and they're making progress at their own rate, right? So that's very important. If you forward progress is forward progress, even if it's not that fast. One step in front of the other, you'll get there just as long as you're consistent. Brad King says, you mentioned, and this is in the private chat, by the way, you mentioned yesterday using ATR on 1 minute and keeping it above 20. What should it be above on 15 minutes? Well, actually, ATR is it's actually ADX, not ATR. And the ADX is the average directional index, and that's going to be a volatility measurement. So it should be, and it doesn't have to be on the 1 minute. I may have used it on the 1 minute because it mattered for that algo, but you need to test what your ADX levels are relative to your algo. So it might be on a different time frame. You have to actually go through your time frames. And 20 or 25. People use 20 or 25. When ADX goes below 20 or 25, you start to see problems with volatility. The market tends to get a little bit choppy around those numbers. But if you're trading the 15, it may be that you're looking at the 15. If if it's more of an entry issue, it might be on the 1 minute. It just depends on whether or not you're trading the 3 hour or the 4 hour. So that's, you got to look, but 20 and 25 are the standard numbers. I like 20. I like, my algos are powerful enough to where I can eke out trades above 20. So, but for some people it's 25. They want a stronger signal. So you just got to look through your time frames and get that figured out. Okay, so the gorilla is in.
Shabbat shalom. Shabbat shalom. Shabbat shalom.
Shabbat shalom. Yeah, it's just in time to give us that send off to private group.
Yeah, listen, you savages. Thursday, major drip coming. Major, 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 major. That's 4 majors. When I give you 4 majors, you know it's pretty damn serious. Flash, you get on the QR code, scan it, join us. Some top level info coming next Thursday, right here on AlgoFactory.tech. It's going to be market altering, paradigm altering, and mind blasting all at the same time.
Well, the last like few drips have been pretty heavy, so that's that's good. I mean, heavy not in a negative way, just heavy in a data sense, right?
Yep.
Yeah. So for those who are maybe new to the channel, most Thursdays, the gorilla comes in with some information from the what do you call it? The boardroom. The boardroom. Yeah. So these are people who are. Trev asked, do 4 majors make a rear admiral?
Yes. Yes, it does. In America, the rear admiral is the most powerful position in the military in the United States. The rear.
I thought it was the guy behind the rear admiral.
No. The rear admiral. He rules over all the rear ends.
Oh, so the rear admiral probably orders Alex Soros around.
Yes. You leave Alex out of this.
Yeah, we're gonna hop off. We love you all. Look, the part of the reason the gorilla got here at 9 instead of 8:30 was because he was on the phone with some of his contacts around the planet, and that's where we get our drips from. So that's why the gorilla sometimes shows up a little bit later, because he is dealing with some pretty big people out there.